And we'll get started. First thing first, because we do everything legally and ethically. I wanted to show you my disclaimer first, not to put you to sleep. If you want to read it, take a screenshot. And before you go to bed, I'm sure it will help. So this is basically telling you that if you want legal advice, it's very important to build up your power team. Perhaps you have more than one lawyer that you're working with, mortgage brokers or realtors that you're currently working with. As much as I want to help you, I'm talking to you from this perspective as an investor. So I put on my investor's hat. You're doing the same. So this is more like a test run of what it's like in the real world of investors. So you know that you're going to have a power team once you build it up. It doesn't have to be in your backyard. So you could have mortgage brokers that focus on, for example, BC, Alberta. I'm talking about where people are from in the group, or I'm in Ontario. Sometimes mortgage brokers are market specific, or they have license in probably a couple of provinces. So sometimes you need more than one mortgage brokers. And even bank mortgage specialists sometimes could help you as well. What I'm aiming to say is that as much as I want to be everybody to you, you're going to be having a lot of people on your power team, depending on what market you're getting into. Especially you're thinking about scaling. That's what we're going to talk about today. From 0 to 10 properties. It sounds like a lot. And if you just break it down, like anything, if you just do 1%, 2% at a time, or if you just focus on one project per month, or say 2 projects a month, in a year and a half or a year and a quarter, you can work on 10 different properties. However, really, we're not property collectors, even though the topic today is about from 0 to 10 properties in 2 years. The goal is for you to have your asset that generates income for you. So besides mortgage brokers, accountants, lawyers, perhaps you can tell me one more that I haven't listed here. There's a whole list of power team members you should have on your power team. Donnie, can you tell me one more that I haven't listed here?
I mean, on your power team, I can't really think right off the top of my head. Investors, partners.
Hint, hint. Yes, you can have your money partners, or perhaps you have the money and then other people who have deals could be on your power team as well. Anybody who could be in your network. And realtors, because we're in real estate, so just another example. Or because we're talking about scaling and perhaps flipping. Contractors, they're very important on your power team as well. And by the way, you're not going to just have one lawyer. And if you start to scale, you're going to set up your corporations and lawyers who are familiar with estate planning. Some lawyers are just familiar with closing, real estate closing. Or sometimes, knock on wood, I hope you don't need them right away, litigation lawyers, in case you get into the situation you don't want to be in. Or paralegals. My paralegals are very important on my power team as well. Reminder, your mentors are also on your power team. So Kevin can tell you how much conversation we had. When you have your mentor on your power team, is also somebody who's checking your blind spot for you. So we're also part of your power team, even though we're not any of these educated people on the list or having a license. At the same time, we're here to help you grow and help you scale. So don't forget, we're here to help. The whole team at Trust Your Talent is here to help. And even the student ambassadors, they're here to share their experiences as well. So I know that students sometimes get together, they meet up, and word of mouth is very important as well. I know, Kevin, you can read it on the side. This is just a reminder for people who want to know how to form a power team. So I'm going to translate it. This is a reminder for myself. If you're not the smartest person, find the smartest person to plan for you. If you don't have the smarts, but you're strong, leverage somebody's strength. And if you have none of the above, but you have the courage, leverage their courage. And a lot of the times, people who are really careful, who are scared, they're usually the most diligent people you want to have on your team to plan for you, to do the due diligence for you. And if you're none of the above, you're going to be the leader on the team. You have to learn how to utilize everybody else's strength. And that's what we're here for. That's how you build and scale. You leverage other people's know-how. You leverage other people's money, OPK, leverage other people's knowledge. I'm sure there's a lot more you can leverage other people's network. And actually, I think that's one of the biggest things at Trust Your Talent. Not only us as trainers and mentors, and also students, and also the power team members that we're working with. By the way, as you scale or getting into different markets, or perhaps your power team members will also change. They might have some changes in their own life too. Some of my power team members retired, a lawyer retired, so you're going to find somebody new on your power team. Or perhaps you're getting into different kind of strategies, so you're going to start to know more people as well. We spend a lot of time talking about power team because it's really important when you start your business to build that team. A lot of the time, when you start to get into a market, why do we spend so much time building our power team while we're doing our mentorship in different markets? Because really, they're the ones that help you build your real estate portfolio and to scale. Particularly, we're talking about building your portfolio from 0 to 10 properties in 2 years. That's the topic today. And just to give you an idea, at Trust Your Talent, we do have the system that everybody follows, regardless of who you talk to on the team or even the students you talk to, or different strategies you plan to focus on. The fundamentals, the mindset is what set us apart. The system is there. So I will go through the REI, real estate investing fundamentals with you. I understand that, for example, Kevin and Weddy, you're in the game for a little bit while compared to Sunny, compared to Donnie, who are new. However, we all follow the same path. So when I go through my intro, I'm just ahead of you. A few years ago, I was still here sitting in your seat. At the same time, we follow the system. So you don't have to reinvent the wheel. And even for myself, a lot of the times when I hear the same concept again and present it to me in a different way, perhaps all of a sudden I have a new epiphany. I hope everything I said today makes sense to you. At the same time, it might not be the first time you hear about this. However, if there's a takeaway, if it's something that resonates with you at this point in your life, at this point of your investing journey, write it down. So when you think about it, that's the start. When you write about it, hear me saying it, or even repeat it to people who you want to introduce to the community or share the wealth. Share what you learned, what you're so excited about. That's how it takes you to another level. So again, I appreciate you being here. I appreciate the opportunity for you to spend the time with me, invest your time with me, so I can share some of the learnings I have throughout the years. So I mentioned that you don't have to be the smartest person. I'm certainly not the smartest person on the team. However, you're going to learn, and we're all going to grow together. You don't get rich by being smart, having good grades. You get rich by understanding how money works. Even though we leverage real estate as the vehicle, this is really about financial education. So we do have paper asset as part of our curriculum right now. And also, this does apply to other things you might be working in as a business or as an investor, for example. So I like things in 3. We're going to talk about how to first appreciate. I'm going to give you 3 keys as we go through how to scale your portfolio from 0 to 10 properties. And the key players on your power team. So I highlighted scale your real estate portfolio. At the same time, it might be something that you want to focus on. It might be a strategy you want to focus on. However, I'm sure if you want to scale, you want to have different tools in your tool belt so you can pull them all out. Excuse me. When you need to scale your portfolio, or a lot of the times we talk about 3 different exit strategies. And because the market constantly changes, you want to learn, for example, 3 different strategies, even though when you're starting, you might want to focus first. So follow one course till you're successful when you get started. Same thing as you're in the room with me today. So I appreciate when you have your cameras on, I can tell that you're focusing on what we're learning today. That's the number one course rule, focus. And if you just want to read the slides, reach out to us, take action. I can give you the slides at the end of the class or after when you reach out to me. If you're just reading the slides, that takes you to 10% of the learning. And I can see that you're turning the volume up and you're listening to me. That's the second level. When you're hearing it, you learn about 20%. And it's when you're seeing it, hearing it, and also when you watch the recording, when you talk about it. And that's 50% of the learning. You see it, you hear it, you read it. And when you want to take it to the next level, 70% of the learning, you have your camera on. You're participating in class. And when you have a question, raise your hand. By the way, since I have Kevin and Wendy here today, they will check the chat box for me. Regardless, I'm going to stay till the end and make sure I go through all the questions. So I will stay here as long as you have questions towards the end. However, if there's something that's going to stop you from going to the next level, meaning if you're so stuck, you don't think that you can continue to learn in the setting, raise your hand, then I will answer your question right away. Okay? Because I want you to maximize your learning in the room today. And you might realize that this only takes you to 70%. However, it's when you present it, and that's what I'm doing here. When you repeat it, when you're doing it, when you're taking action, or even if you're going home today, talk about what you've learned to your roommates, to your husband, to your wife. Then you're really experiencing it like I talked about. We're basically simulating what it is like as an investor. So you're going to take it to the next level. So same thing for me. When I'm teaching, I realize that I can communicate it in a better way through experience from your reaction. That takes learning to 90%. That takes learning to 90%. So same thing, like I mentioned, if you're existing students, introduce others to the community. Because when you repeat it and when you want to share the wealth, you're taking your own learning level to 90%. What's the 10%? That's actually my favorite. When you're having fun, that's when you get to the 100%. That's the 10% that's left. Because people always remember how you make them feel. They might not remember every single thing I put on the slides. However, we always remember how people make us feel. So you'll always remember how much fun you have in here, or what Brooke said that resonates with you today. So I want you to get to the 100%. So have some fun. I know that I might show some ugly houses, some stressful situation. Regardless, I'm going to show you how to make money and how to solve problem so you can have fun with it, so you can make profit from it. After all, we're all problem solvers as investors. And this year, the theme, Trust Your Talent, is be about it. And really, it's not just a New Year resolution. Even though we're a quarter into 2024, be about it is about taking action and be the person that's really who you said you're going to be. So we're all active investors here, existing students. I know Kevin and Weddy are student ambassadors here today. They're also action takers. And as trainers and mentors on the team, one of the requirements is that we're all active investors. So I know that I don't have all the answers. However, I'm in the game, so I do want to provide you with the most updated information. Even though the system and the concept we follow is evergreen, at the same time, we constantly pivot. So this is the theme, and you're already starting here to take action to get yourself to the next level. And even so, I still show you a picture of everybody having fun here. However, I just want to ask you how you feel about the market. I know that a lot of people seeing the news thinking that the future doesn't look so bright. So this is the most recent data I pulled. Since I've been teaching the course, the number actually didn't improve. And I think that's also why it is so important for you to get financially educated. So the most updated data shows that 63% of the people spending their entire paycheck every month. And this is actually not the worst case scenario, because a lot of people carry a lot of credit card debt as well. So they're spending more. I'm not against debt. You know the difference between good debt and bad debt. Can somebody give me a quick definition of a good debt versus a bad debt? So maybe, Donnie, you already muted yourself. Come on.
I figure a good debt is going to be like a piece of real estate, something that's going to pay for itself, whereas like a bad debt's going to be a boat that you have to pay for every month out of your pocket from your paycheck.
Yeah, so good debt, put money in your pocket. Thank you for giving me the example. So that's exactly it. Not against that, and we plan to show you how good debt works. However, a lot of people don't. And that's why we're so passionate about financial education. Again, it might be about real estate. We use it as a vehicle. At the same time, the mindset of an investor and of people who have the grasp of how money works is what sets people apart. And really, you're just here for the training to get yourself started. I know the number I showed previously seems pretty pessimistic. So I do want to show you something new. Oh, by the way, the news came out today. Did anybody follow the interest rate released by Bank of Canada? Wendy, you're nodding your head so hard. So what did you hear today about the interest rate from Bank of Canada? Unmute yourself. Where are we?
Same.
The stays the
Good news.
same.
Yeah.
Yeah, exactly. So one of the things that a lot of mortgage brokers do, or some of the data here are from the banks or even realtors. People were hoping that this year could be a better year. So at least we had a good start. Inflation is stable and interest rate didn't increase. However, they didn't just drop it. And I think we had a discussion before we started the webinar. The three of us were saying, we realized when the market was good, everybody wanted to get into real estate. And we see a lot of people sitting in the seat you're in today. A lot more people wanted to get in. They don't want to miss out. However, it is really doing the bad times that sets people apart. Because when everybody's greedy, you should be fearful. And vice versa. So I just want to show you the most recent data that resonates with what we were talking about today. Regardless of which direction the market is going, up, down, sideways, investors, you should be able to navigate regardless of which direction it's going. However, not everything is going to be rainbow and butterflies. That's why it's so important for you to know your whys. Because when you have a big enough why, all the obstacles don't seem so big anymore. It doesn't matter as much anymore. Or you'll find ways, you'll learn. You'll find different vehicles. You'll find multiple exit strategies to get to your goal if you have a strong enough why. So even though I know some people think we constantly talk about your goals, talk about your whys, yes, it is very important. If you don't have something to aim for, how do you know what you want to get? So as simple as that. And I know that even for myself, sometimes we have to pivot. You might have set your goal in the beginning of the year. When things get tough, you might want to change your goals and why. However, you might just need to pivot a little bit. You might just want to take action. So sometimes we're stuck. If you just want to take action and get yourself to that additional 1%, 2%, and that's why you're here. I know that you're taking action today. So I'm open if you want to talk about your why, or if you want to have a little bit of clarity, sometimes among investors, or sometimes Kevin and I have a conversation. If you just want to have some clarity, it helps. It helps to have somebody check your blind spot. And again, give you some clarity. I'm just a few years ahead of you. I was on the same path. as pretty much all of you in the room here. So I want to start by knowing what your goals and your whys are. And one of the things we do here, one of the things that help us to define our goals or why or the direction of the year is look at the core value at Trust Your Talent. So here are the 5 to give you a little hint if you're still not clear. And I do think you don't just look at your goals and your why in the beginning of the year. I hear people saying they look at it monthly, or sometimes we forgot why we're doing what we're doing. So if you don't have clarity yet, or if you want a little bit more clarity, I found this really helpful. If you just look at the 5 core values and think about what you want to focus on. So even within Trust Your Talent, we look at what we want to focus on in the beginning of the year. And for myself, by the way, it changes every year. So I'll give you an example. If you want to focus on fulfillment and impact, for example, and something happens, perhaps somebody in your family going through health issues, and all of a sudden you realize that you want to focus on health this year. So if you don't have clarity, this will help you. And personally, sometimes I want to focus on impact. At the same time, if you're running too fast or you're feeling that you're exhausted, maybe you want to switch gear and focus on sustainability. Can you sustain? So if you don't have a clear goal and why yet, I found that helpful to just go through a few ways of going through it. So one way I want to learn about why you're here today, and I'm going to participate as well myself, because sometimes I need a refresher too. So my ambassadors, could you help us pull out the poll? Perhaps a fear. You have a little bit of fear. You want to know how other investors go through the same self-doubt, what ifs. How are you going to do that? Perhaps that's why you're here today. Or you just want some motivation. You want to be motivated to get started, strategically get yourself there. Or number 3, you just want to learn. You want the knowledge. And that's totally fine. Because for a lot of people, to get through the fear is to go through the education and know how to perhaps solve a few problems, how other people are doing it, how other people's pivot. Or number 4, you just want some support. And as I mentioned earlier when we started, community is a huge part. You can sit there and analyze deals. Sometimes the road of an entrepreneur could be lonely. And how many deals, Waddy or Kevin, you have analyzed, perhaps sitting in front of your computer? You might need support from the community, from people who have already done it, whether they are your peers or us, trainers and mentors. And number 5, if you just want to start taking action, and I'm going to take you step by step as to how to start. Take action to get yourself started. So can I have your help pull out the poll so we can put in our answers? Okay, can everybody see this on the screen? Yes? Okay, good. And Winnie and Kevin, you can put in your answers too. Because besides helping me, I hope you can get something out of it too. And I see that Danielle just logged in. So welcome. You can also participate in the poll at the same time. Sometimes this gives me an idea as to the direction of the webinar. When we go through certain points, I can put a little bit more emphasis on it to help navigate how to get started. Okay? All right. I think most people or everybody has put in the answers already. Can everybody see the results? Okay, I can see the smiles. So number 1, fear. Okay, for sure, let's talk about it. And I do have some scary pictures of the before pictures to share with you. So yes, the end results looks amazing. At the same time, how do you conquer fear when you want to get started? And the second one is action. Start taking action. Perfect. Because we're going to go through a few actual examples of my own flips and also a couple from the trainers on the team as well. And I'm glad that number one answer was fear and start to take action. Because if you just think about it, it's a dream. And if you can envision it, it's possible. By the way, do any of you do vision boards in the beginning of the year? Nobody? Oh, just me? Okay. All right. Maybe that's something you can start doing. It's a lot of fun. Like scrapbooking. You can even do it with your kids. So number two is if you can envision it, it's possible. And if you schedule it, it's real. It is not my own quote. It resonates with me because the next step you can take is speak to a strategy coach. By the way, Donnie, do you have a strategy coach? That's Weddy's vision board. Okay.
Yep, I talked with Vince.
Oh, perfect. Okay. So Weddy was sharing his vision board. Can you pull it closer to the camera? Just do it. Perfect. Thank you for sharing. And I see big financial freedom on it too. Thank you for sharing. So if you already have a mentor, reach out to us if you still want some clarity. I just want to put it out there. And I think some of you are going to be at the live event, right? So Weddy, you will be there. Donnie, you will be there. March 8th to 10th. That's coming up pretty soon. And I put a little screenshot of the upcoming events. You will receive it in your email if you're existing students. However, one thing, like I said, to make sure we remember things is to write it down. So if you're like me, you like paper, I actually have my calendar right here. Write it down on your calendar of the upcoming events. So I trust your talent. We keep you busy. We keep the momentum going. Yes. I'm glad one of the answer of the poll earlier was to get motivated. I'm sure you can find motivations within the group and also by participating in Mastermind Collection and also the Live Connect events. Usually after the second day of the live workshop is where we hold our Live Connect TYT events. So the next one coming up is in Edmonton. If you want to see some of us in person, make sure you mark it down on your calendar. And also the webinars. Today, we're going to talk about from 0 to 10 investment properties. And next coming up, how to create 20,000 of cash flow every month through real estate investing or through paper assets. Okay, so the one after that, also how to create $20,000 of passive cash flow or how to replace your six-figure income. So that's the next one following. By the way, any of you still working? I am. Good. So my last webinar, I think more than half of the people are still working and their goals are to get out of their job or even just to have the freedom, knowing that you have the ability to replace the income, whether you still want to stay in your job or just know that you have the ability to generate income. So again, we talked about fear. Just envision if you're already financially free. Oh, by the way, some of you are financially free in the group are financial freedom fighters. So you understand that once you have the freedom, it's really about the choice. The choice of working, the choice of being with whoever, going wherever you want to be, how you manage your time. Also, because I know that some of you watching the recording or you guys in the room, you do want to share the wealth. And I love this quote from my hero, Oprah. Knowledge is not complete until you share it. And that's why she started a school in South Africa. And same thing, that's why we teach. That's why it's a passion project for all of us on the team. Because knowledge is not complete until you share it. If it's closed book that nobody reads, it's not going to be passed down. And I'm sure Kevin and Wendy, you're volunteering. You understand that how rewarding it is, right? Sometimes when you're able to share. And we do want to pay it forward. So for existing students, If you're sharing your wealth, there's cash referral bonus for every successful referral into the workshop. So usually the next step after the free webinar is to get into the live workshop. And this year, the workshop are all live in person. And once you understand how different strategies work, once you have the basic understanding what strategies are out there and how us on the team or some of the students reach their financial goals through various strategies, how to pull different tools in your toolbox. Then you get into a mentorship program. By the way, like we mentioned, you can read and you can hear what we have to say. However, it's really when you start to take action. And imagine how fast you can run if we hold your hand and take you in the field to get you started. Can you imagine how much faster you can run if somebody show you the way and set a timeline and set a goal with you? And you can ask to check your blind spot throughout the way. I know that sometimes it is a lonely road when you're just sitting there and going through different deals, analyzing different deals. You might want to talk to your peers, talk to your mentor, or talk to all the trainers on the team. That's why we focus so much on the mentorship, because it's really doing the mentorship, and I see that among existing students too, that you really start to accelerate and you see how it's done in the field, how you're actually doing it as an investor. And that's why mentorship program is so important. You can pick a market. Again, it doesn't have to be in your backyard. It could be anywhere. And I will take you through the process of how we at Trusted Talent follow the system and the process to determine what markets to get into and what strategy will help you reach your financial goals. And at the same time, we mentioned that your power team members are so important to help you scale. So we do provide a special discount for power team members that will complement all the real estate investors within the community. So we'll consider all professions that's complementary to real estate investors. I only mentioned a few earlier: realtors, mortgage brokers, lawyers, however, also contractors, insurance brokers. They're also part of your power team, or even plumbers and electricians, designers. They're all part of your power team. And you want to work with people who have the same mindset, so it's easier to communicate. Isn't it a lot easier now you're in the community or speak to people who speak the same language as you, as an investor? So that's where we're coming from. These are the incentives for existing students. And I know some of you are already in the room, so share the wealth just like we're sharing right here, like I'm sharing here today. So I'll share a little bit about me and my journey, perhaps resonates with you because you're starting probably where I started at in 2016. And by now you probably know that English is not my first language. Even though I've done this for a while, I've gone through a few webinars. At the same time, it took me a while to be comfortable, not just because of English as second language, and also just to get comfortable. So same thing, you as an investor. Once you speak to a few joint venture partners, for example, or you repeat your experience to other people, you get familiar with it. Same thing as me. I started the journey in 2016. I actually consider myself very, very lucky because I know, Kevin, you have young kids too. And perhaps you do want to spend a lot of time with your family. So I was lucky enough to spend 10 years at home with my kids. I volunteered. I always showed up at different events. However, at a point, they're in school most of the day. And lucky enough, I found a job to go back to work. At the same time, I realized that now our expenses are higher. By the way, we just contributed to RSP. And when I was working, our tax bracket reached another level. We pay a lot of tax. And I realized even though we have double income, we're not any better off. We're not educated financially, even though I had a master's degree in business. Regardless, I didn't know how to manage our own finances. I didn't look at money exactly the same way. we saved nothing at all because we contributed to RSP. Otherwise, we have to come up with a big chunk of money to pay for tax. At the same time, my family was in Taiwan. So every year, I have to fly back to see my family, especially when my father was ill. So he passed away in 2017, basically just as I started real estate investing. So we had no savings. The only wealth I could see was from the property we owned. I didn't know about HELOC. I only knew that if we sell the house, we can make some money. I had HELOC, but I never understand how to utilize it. Had no idea how to make bad debt good debt, even though I read the book Rich Dad Poor Dad. It made sense. I just didn't know how. And I thought if anybody was willing to show me how, at the age of 40, I'm willing to put in the time and the effort to invest in myself. Looking back, the return was infinite because I'm still in it. I know everybody's path is different. By the way, I'm still working. I have some financial freedom at the same time. I still have to manage my time well. And I still love my job. My job allows me to have flexibility. And at the same time, I replace my working income. So I don't look at work exactly the same way anymore. I think one example is that politics, office politics, doesn't bother me as much now. I still like my job. However, if I lose it one day, I have an idea how to replace the income, at least. And like everything we do, everything is goal-oriented. I wrote my book in 2020. During COVID. At the same time, I just want to show everybody how it's done. If you're part of the community already and you have read the book, it's basically just following the path, like all of us on the team. You start with something in mind. So when I started, something in mind was just to not stay in the rat race and not knowing how to get out. Because you make more, you pay more, your expenses are going to increase as well. And for me, this is one of the ways to spread the message. I can speak to you. At the same time, I can hand you a book. It's like my resume. And I'm really open about my journey. And also the strategies that helped me reach my financial goal. Another goal I had was to be comfortable just speaking in front of you. And that's why I'm here. I hope you have a goal. And we have so many vehicles now as an investor. Because, for example, for me, people are interested to see if you're in the same situation at age 40, you realize you haven't accumulated much wealth. What's the path that's out there? What are the possibilities? I'm sure somebody will resonate with your stories as well. So I look forward to hear your financial freedom stories as well. I've heard Kevin's, Weddy is on the way. So Donnie, I think with everybody that I see in front of me, you're next. There you go. I love the smile and the thumbs up. And I show a picture here. That's actually specifically for my financial goal. Because one of the things I wanted to do, or my family wanted to do, is to move from an 1,100 square foot home that housed 4 people to a single family home. And one of the examples I always use is that think about how it helped you reach your financial goal. I use my house as an example because if we want to increase, for example, the budget of $100,000 in mortgage, I want to pay another $100,000 to buy a home that we really want. That means, hey, it's about $500 per month of additional mortgage costs. So what am I going to do to increase my income by $500 a month or $6,000 a year? Okay, so just to give you an example, perhaps you flip a house that gives you a $6,000 paycheck. Or if you have a lease option deal, $500 monthly income. Or if you do private lending, or if you have a multifamily that gives you $1,000 of cash flow after stabilization, perhaps that's how you reach your financial goal. And this is everybody in the community, my mentees, my mentors, and also the people that helped me reach my financial freedom goal, my tenant buyers in the corner of this picture. So all of them have reached their financial goals of homeownership as well. I mean, everybody's different. Perhaps that's the financial vehicle you're going to use to help you reach your financial goals. And I found it similar to what we're doing here. Students want to reach their financial goals, and tenant buyers want to reach their financial goals. One day you're going to work with different joint venture partners. Perhaps they still love their job or they don't have the time. They could partner up with you and you help them reach their financial goals. At Trust Your Talent, these are the curriculums that we offer. You don't just know about one strategy because we mentioned 3x3. Focus on 3 different strategies and know 3 different exit strategies. I will take you through one example to show you how, if you have a distressed property, that you can utilize different strategies. Perhaps you keep it as a long-term rental, as an income property. Perhaps you're going to flip it as a distressed property or service accommodation, etc. Just to give you some idea as to what kind of exit strategies possibly you could be looking at. At the same time, soft strategies are also very important. Business fundamentals, how to structure your corporations, what are the tax benefits, estate planning, etc., and creative financing, not partial. However, that's how I reach my financial freedom. And a good deal is found. A great deal is created. That's why it's so important to know how to structure a deal creatively. And regardless of what strategies you're going to focus on, you're going to learn about financing. Even if it's your first property or if you bought your own home, you went through the process of mortgage qualification. That is part of OPM, the bank's OPM. Other people's money that help you reach your financial goal. So I do believe that all the soft skills are also important for you to have all the tools to help you reach your goal and structure your deal. And this is basically the path that we all follow. It all starts from you. What's your purpose? What's really important to you? To me, the community is important. People are important. So start from yourself. At the same time, if you don't take care of yourself, you're not going to be able to take care of other people. So it all starts from you. I used to put a thinking hat as the starting point. I think we can go a little bit deeper. What is your purpose? What's really important to you? So when things get tough, you're going to still sustain as an investor. And there's different buckets of income. At different point in time, we talk about multiple streams of income as well. So on average, millionaires have 7 streams of income. Just put it out there. And with different strategies, you can focus on different buckets of income. I'm not against people working. So if you love your job, I'm working here right now. And I appreciate you spending the time with me. If you're trading time for money, that's earned income. So if we're going to talk about fix and flip today, perhaps you flip 1, you flip 4 houses a year. We're talking about something that you're going to be consistently doing so you can generate income. That's fix and flip. You're going to find time and trade your time for money. By the way, if it's something you love to do, by all means do it. Trade time for money. If it's something purposeful, meaningful to you, I think you should definitely do that. The point of financial freedom is to have the freedom to choose to do that. And I know we focus on cash flow and passive income. And this is when something happens to you, money is still coming in. So that's cash flow, either from, for example, income property, once it's stabilized. Property that generates cash flow. I usually don't consider properties that takes money out of your pocket if it doesn't cash flow. I don't think we should call them income properties if they don't generate cash flow. Lease option is one strategy that's going to generate cash flow, portfolio income, and earned income. At the same time, there's cash flow. So I listed lease option and income properties as strategy that generates passive income for you. Today, when we go through generating income through 0 to 10 properties, we're going to start from money in the buy. Always look for opportunities for money in the buy. Okay, don't overpay. Even if money in the buy is disguised, and most people might not see it, if you see the potential, You can flip the property or force appreciate it, so money in the buy. And private lending is also portfolio income or paper income. A lot of the time, we describe it as money in the piggy bank. So that's your portfolio income. These are different buckets that will help you generate income so you can reach your goal. So financially, you can support it to generate enough income for you to focus on your purpose, security, community, and discover what you're really interested in to give back to the community. I mean, for those of us who have kids, you want to generate a better lifestyle, have income, have a legacy. And it all starts from you, okay? From there, if you know what type of buckets of income you're going to focus on, and that's when you start to look at the strategies you're going to focus in. So, Donnie, can you give me an idea? What does SMP stand for? S. Don't do it backwards.
Strategy, market, property.
Thank you. Thank you for sharing. Yes. Don't do it backwards. A lot of the times when people start from property first, that's when they start to encounter problems. And during the time when market turned last year, interest rates started to go up. A lot of people don't know what to do with their properties. And I actually received a lot of calls. People want to sell the property, wholesale the property to me, or asking, what can we do? If I focus on lease option, can I have tenant buyers in my property? They started from property first. However, and usually that's when problems occur. It's harder to do it that way. I don't say it's impossible. And I haven't been able to help them in a lot of cases when it's property first, or they already purchased a property thinking the market will continue to stay high when the interest rates start to increase. And I think that's particularly evident last year, middle of last year, when interest rates started to go up. And a lot of people still stay in the game. We still stay in the game. Not everybody was able to have the community to help them out or have the know-how to know multiple exit strategies to get out of trouble. They only know how to get into it. That's why it's very important to follow the goal-focused approach. Start from yourself first. Never go the other way around. PMS. So I do want to let you know that our goal is to create financial freedom one person at a time. And if I'm not making a difference in your life, I don't mind if you think this is not adding value and you want to just log out. However, even if it's one thing that resonates with you, that's going to make a difference in your life, and said it in a different way, I know that a lot of the mindset might seem very similar. If said in another way that resonates with you, that's going to help you to get to the next level. Write it down. Write it down. Same thing when I use Oprah's example. She recently said she thinks if knowledge is not shared, it's not complete. And it's the same idea. However, say it in a different way, in a new way, perhaps it hits you in a different way. So I want to make a difference in your life. And that's the business we're in, to make a difference in people's life, one person at a time. And I hope you can do that too. And we're passing it down to the next generation. So now they're the coordinators, they're here with us. They know what's behind the scene now as we were talking before we started. And I know everybody started at a different stage in life. Sometimes I do a survey when we started the webinar as to what age group do you belong to. And no right or wrong answer. If you're younger, you do have more assets because you still have a lot of time to generate more wealth, to grow your capital, regardless of where you start. We usually buy and sell to create capital so we can buy and hold to create wealth. So a lot of the times when people don't have the capital to start, perhaps you can buy and sell and flip, or start from short-term or mid-term strategy. I can tell you, I started from lease auction, and I thought 3 years, 2 to 3 years, or 2 to 4 years seemed like a very short time. And all of a sudden, 3 years passed, 4 years passed, and I accumulated some capital from the sales of those properties. And now I focus more on creating wealth. Or if perhaps you already have some capital, you can focus on being the bank or hold a property for a longer period of time. If you haven't read the book, Cash Flow Quadrant, you want to be, by the way, which side of the quadrant do you want to be in? If you want to be on the right side, raise your hand. All right, perfect. I know that's why you're here. You want to be business owners and investors. A lot of self-employed people thinking they're business owners. However, they just bought a job. They have to go to the restaurant 17 hours a day, or they have to be there when the system is not running. They're basically buying themselves a job and not even paying themselves. So make sure you understand how the system works and it's scalable. I want to keep things simple for you. Three rules when we talk about investing in distressed property. Number one, money in the buy. If you haven't written anything down, write these three things down. Money in the buy. Number one, multiple exit strategies. When I went through the curriculum, I already mentioned a few times multiple exit strategies. Money in the buy, when we talk about different asset classes. And number three, forced appreciation. When it's property first, always look for opportunities for forced appreciation. So write these three things down. And you can take a picture too. Action takers, if you reach out to me or your strategy coaches, we can send you the slides. And you can also ask questions at the end of the webinar. So if you look at short-term, mid-term, and long-term goals, all these strategies could apply. And if we talk about distressed property, if you're looking at short-term goals, if you want to fix and flip, perhaps renovate it for a few months, sell it within a year or so. Short-term strategies, you're going to generate some capital right away. Mid-term strategies, I usually categorize it as less than 5 years. And I'll share something with you. And I thought income property is supposed to be for long term. Funny enough, some of my income properties I sold within 2-3 years, even before my joint venture or lease option deals matured. It depends on your personal goals. A lot of the times you have to pivot. And say, for example, you have an income property and you have a joint venture with somebody, and in 3 years, when mortgage matures, you both decided to sell it. Even though it's income properties, it ended up to be a midterm strategy. So this is fluid. I'm just giving you an idea where you're looking at your own financial planning. Think about what you want to achieve short-term, midterm, and long-term. At Trust Your Talent, our goal is to help you reach financial freedom in 5 years. And I understand that everybody is different. You might want to start by accumulating some capital first. And in that case, you might look for wholesale deals and flip deals. Midterm strategy lease option, which is coming up pretty soon as a live class for March at Trust Your Talent. So I'm highlighting this portion for you. We're going to talk about income properties, flips, as we go through distressed property today. So number 2, you're going to have multiple exit strategies. What if you intend to hold it long term? And all of a sudden you realize, hey, like my personal example, I wanted to hold it long term. Then I realized that I'd rather have some capital at this point in my life. So it ended up to be a flip. I also have lease option. As much as I want to help the tenant buyers to become homeowners, the tenant buyers have some health issues. They have to live close to the hospital, closer to downtown Toronto. So we sold the property in Orangeville, which is not too far from GTA, Greater Toronto Area. That wasn't my intention. Regardless, it ended up to be a flip, and we turned a 2-bedroom into a 3-bedroom and sold the property as a flip within a year and a half. My point is, you want to know different strategies. So when things happen, you know what to do and how to utilize different exit strategies. Number 3, force appreciation. So again, property first strategy, you're usually looking for opportunities to proactively adding value to the properties. I know some of us are focusing on income properties, multifamily, and a lot of the times you might be able to add, for example, additional units or turn a 4-unit property to a 6-unit or to build in the vacant land. In this example, if you see the picture on top, I know it doesn't look like the house will hold. As investors, when you see houses like this, what do you see? Opportunities or dollar sign. Is that what you see, dollar signs? Yes. Woohoo. So we look for opportunities to proactively add value to the property. I simplify the numbers for you, and we'll actually go through this example. What's the difference between market and forced appreciation? I'll give you one little hint. Speculators and investors are different. Speculators and investors are different. Can you give me one example of market or natural appreciation? Can you give me one example of that? Weddy, give me one example of natural market appreciation.
Market appreciation?
Mm-hmm.
Not sure.
No worries. It's just naturally property value goes up.
Okay. So, yeah, like Toronto's and Vancouver, because of demand is high and low supply, that's also drive up the value, and also low interest rate.
Exactly. By the way, stereotype, because you're in Alberta, as in Ontario, have the stereotype that Alberta usually have very little market or natural appreciation. As long as, by the way, it depends on what your goals are. If you can cash flow, for example, if it makes sense. So speculators look for opportunities where the price just go up. They don't do anything. They were hoping that the market will go up, like in Vancouver, like in GTA. For example, one of the properties I have increased by 30% during COVID. That's not normal, though. You can't depend on that. No, and a lot of the times, that's why people who focus on property get into trouble. They were hoping that they just buy it. Like stock, if you're not educated, just wait for the price to go up, you buy, and then waiting for the price to go up to sell. And that's a speculator. That's it. That is not what an educated investor would do. So market versus forced appreciation. In general, in Canada, on average, it increases by 5 to 7% naturally every year. In general. And speculation leads to liquidation, by the way. And we're not taking advantage of people. However, this is when a lot of opportunities occur, when people had to liquidate. Remember money in the buy? A lot of the times there are opportunities out there. So here's an example of a distressed property. And when I started investing in London, Ontario, it's actually close to Western University. I did a distressed property or a flip with one of the wholesalers when we both just started. The purchase price, simplify the number, was actually just above 200. So the purchase price was 200. We spent $70,000 to renovate. Not a huge renovation. And at the time, the market was good. Renovation cost wasn't as high as it is today. Renovation cost roughly around $70,000. And we also realized it's important to have curb appeal. If you look at the picture that I'm showing on the right here, does that make it look a lot nicer when you have flowers and trees? So after we put in $70,000 of renovation, we realized that we want to put in a little bit more money for landscaping. So total money in is $2,095. Purchase price, renovation, then add in landscaping in the end. This is a 4-month project, by the way. That includes renovation and selling the property, put it on the market, and actually close it. It was only 4 months. So if that's the case, we were able to sell the property at 433. If that's the case, who would get into this deal? I would be concerned if you're not raising your hand right now. So after 4 months, we were able to profit 140,000. Simple numbers, there's lawyer fee, etc., etc. And just running through the numbers to give you an idea, the profit was 140,000, and it was split between the two of us. Okay. However, as I mentioned, when we started the project, we didn't anticipate $25,000 to do the landscaping in front of the house. I actually pulled out $25,000 of my own money. Not my own money, by the way. It's actually from balance transfer. So me as the lender lend out $25,000 at 12%. And I balance transferred from actually the Green Bank at the time. So these are the examples of what's available today. What's available today. I do want to show you those examples because these are the ones on the market today you can apply. So if you use that as an example, we do have to consider interest when you privately fund the landscaping, for example. So if you're sharing the wealth and the proceeds, same example at 140, even if we don't have $70,000 to renovate, on top of renovating, and then there's landscaping. What if somebody's willing to lend you the money? I was willing to do that at 12%. At 12%, meaning that you have to pay the lender 12% as a profit. So for 4 months, on top of the profit sharing, I was able to get a monthly cash flow. So every month at 12%. And then times 4 months, 3,800. That was how much it would cost us to borrow 70 plus 25,000 to complete the project on top of the purchase price. So if we share the wealth, 140 was the profit, even though we have to debt service at 12%, meaning we have to pay interest at 12%. To me, that's purely cash flow because it was 0% balance transfer. Additional 3,800. Would you be willing to share the wealth? Share the wealth, yes. And would you be willing to be the person that lend of 70 plus 25,000? Yes. So from this example, you can see by doing that, you increase your cash flow by $950 per month. If you're the one that lend out the 70 plus $25,000, okay, that's the power of debt. That's why we talk about good debt and bad debt. I'm not against borrowing to make money. Only borrow money when you can make money. And actually, this is the actual example of a property I owned. And the one on the right is my property. The one on the left belongs to another instructor on the team. I can tell you who it is later on. Regardless, we turned it around. So I'll give you the story behind what's happening there. That's actually during COVID, so pretty recent, 2020. We were nice enough to provide 2 sheds in the back for duplex. So if you're in Edmonton or in the West Coast, you call it suited. So it's a 2-unit on a nice piece of land. It's very, very pretty. We have landscaping done, etc. And we provided 2 sheds in the back for the tenant, 1 for each. And then one of the tenant never even take the garbage out on garbage night. They put everything in the shed. Diapers, food containers, you name it. I just screenshot a small portion of it. And it was during COVID. So nobody was working. Nobody was picking up additional garbage. Even garbage collection in that municipality reduced to every other week. So we really had to find somebody to clean that up. Because the shed was locked, how we found out is the shed next to it started to have mice in it. That's what we found out. This tenant never took anything out. So a nice property became distressed property. And this is the exact property. So we ended up, the tenant actually didn't pay rent and left shortly after, a month or so after. So we renovated the property, and that was actually staged, put nice plants in the front, and sold the property. They also punched holes in the unit. And here's another property that we flipped in a similar setting. Yes, it's actually very stressful when I saw the pictures from my property managers. However, we turned it around, and luckily we sold those properties and made profits. And I just want to show you a few examples. We can definitely run through the numbers as well. And again, when you see problem, look for the opportunities. Number one rule, make money in the buy. You have to figure out which markets you want to get into. One of the things we do is look at population growth and also look at the population in that particular market. One of the markets we looked at in Ontario, for example, I realized a lot of people started to invest in that market because it looks like it cash flows. It looks like the property cost is still reasonable. Later on, I found out the population in that market is declining. And job opportunities, etc., is not as good as it sounds. So look into the market and find discounted properties and find out why. A lot of the times, like I mentioned, perhaps something happened in that market. And how to structure a deal, how to structure it makes a lot of difference. So a lot of the times I understand students were saying, I analyze 100 deals and only one or two works. Well, there are other ways of structuring it creatively. Perhaps you can turn it around. Look for the opportunities. And if you're just looking at the market, look at DOM, days on market, new listings, what's the neighborhood like, and infrastructures, industries. Don't invest in a province or in a municipality with only one industry if it's heavily depending on, say, tourism. For example, in Ontario, there are places that heavily depend on the auto industry. So if one company moves out, that's going to affect the area. Unemployment data, because there are customers, they're the tenants. Schools, are there good schools around it? I'll show you some examples in Ontario, for example. Those are usually the municipalities that are growing. Infrastructure and population growth. So rents, return on investment, and appreciation. Are there opportunities for rents so you can cash flow? Return on investment, appreciation. Rents, for example, in some provinces where I am and where Kevin is, there's rent control. So in terms of rents, is there still opportunity? Does it make sense when you look at the market? So days on market, that's one of the things you hear a lot of realtors talk about. If it's more than 30 days on market, if a property stays more than 30 days on market, do you think it's seller's market or buyer's market? If it's on the market for more than 30 days and it's not selling, do you think it's seller's market or it's buyer's market? Unmute yourself, Donnie.
It's going to be a buyer's market.
Yeah, so you can start to put in conditions and you can start to negotiate. And usually when it's around 30 days, it's a balanced market, okay? And that's a good indicator. Sometimes in the market I'm in, especially last year, sometimes a property sit on the market for some time, then they take it off market, then relist it. So it doesn't look like it's sitting on the market for too long. So that's one of the things you can check and ask your realtor to look through the listings. I mentioned education infrastructure. This is Ontario, for example. So perhaps in Alberta, same thing, around universities, colleges. And I put a dot in where the universities are. Brock University, Carleton University, McMaster, Waterloo, etc., etc. And these are usually the markets we started to see population growth. So some of the things you can take a look at, and usually there's housing demand. You can think, hey, if that's a market I want to invest in, something to consider. And a lot of the times we talk about that. And I do want you to realize that we're talking about return on investment. It's not about how much money you put in, and it's really about how much return on investment it's giving you. And what's our most important investment? It's investment in ourselves. Invest in as much in yourself as you can, because really you're your own biggest asset. Sometimes I put how much I invested in myself in my intro and how long it takes me to get my investment back. However, I do think the investment is infinite because I'm still in the game. I'm still investing. The profit doesn't just stop there or at that one point in time where I got my investment back, because we continue to profit. Or, for me, even sharing my experience and have something to share, to give back, to me, the return is infinite, and it's really hard to measure. If you have kids, if you're showing your kids an example of how you're learning, even though you've graduated from school already, and you're an investor, you're persistent and consistently investing, I think then the return is infinite. It's not even your generation, it's the next generation. It's the generation after them as well. You not only have wealth to share, you also have you as the legacy. And can I quote Oprah again? Your legacy is every life you touched. Just because you see it doesn't mean that's it. And one more thing I want to share, because I went to Van Gogh Museum. He never ever knew how much impact he's made. He had zero legacy from his own point of view because he didn't sell while he was alive. However, his legacy, I think, is infinite as one of the most famous artists. So we actually will never probably know our legacy or how many lives we've touched. And again, it's not about how much it costs you. It's really about how much it makes you. It might sound like a lot of money, and especially now you're in the real estate investing environment, $100,000, $200,000, $1 million. It might sound like a lot. What if you can make $5 million? Doesn't the 50,000, 100,000 sound like nothing when you measure how much it makes you? So that's one of the things to keep in mind. Put your investor's hat on and make it a scalable business. Really, the only thing that's limiting is our time. I do think you can find resources, you can find money, and there's no limit as to how much money we can find, how much profit we can make. We always ask students, what's the return? It's infinite return of your money. However, your time is limited. So think about how much time you have. And that's why it's so important to have somebody here, not only check your blind spots, so you don't have to reinvent the wheels, and to give you that push to accelerate your journey along real estate investing. Again, put your investor's hats on, make it a scalable business. Our time is limited. If you have to personally foresee every single deal, overlook every project, you're not going to be able to scale. Focus on the value you can add. Like I mentioned earlier, if you're not the strongest person, don't try to move the bricks. You're not going to be very efficient. Add value to where you're the best, most valuable. As an investor, it's your ability to see money to structure deals. Just to give you an example, I get that when you're starting, you might not be as efficient. And I'm not against seeing a project from beginning to the end, especially if you're learning right now. If you want to be in the field, take a look if it's close to you. However, let's take a look at how much you can make. If you do yourself, the project, for example, I was showing you as an example, especially me. When I used to live in a condo, I called the management office to change my light bulb because it's too high for me. We didn't even own the ladder living in a condo. So we're not handy. For me to do a project, it's definitely not efficient. If you do a project by yourself, you make $35,000. And even if you're efficient, 3 months, you can flip a house. However, you're going to put in 22 working days, 8 hours a day. Simple math. You make $35,000, divide that by 3 months, divide that by how many days you work that month, divide it by 8 hours. $66 per hour. Doesn't sound bad. Doesn't sound horrible. And if you can hard it out and focus on finding the deal, now you have the know-how because you invest in yourself. Find one deal per month. If you can find one deal per month, 35,000 minus 15, if you have to pay the people who are going to do the work for you, even if you reduce your profit to 20,000, but imagine how quickly can you run. So in 3 months, same time frame, 3 deals, 3 months, 22 days, and 8 hours. If you just focus on finding the deal, negotiate the deal, put your investor's hat on, that's $114 per hour. Still, you're trading your time for money. However, if you can leverage other people's strength, leverage other people's time, and leverage other people's knowledge, you can see that how quickly you can scale, especially we're talking about scaling today. And I do want to share this clip with you because financial freedom is really about how do you want to spend your time with whoever, however you want, whenever you want to do this in your own terms. And I think this clip resonates with me, so I do want to share it with you. Parents in the room, I actually watched this video a few times, and the first time I saw it, it really brought tears in my eye because as parents, and as I'm getting older, and I think I'm older than everybody in the room, my kids are older now as well. And we spent 80% of our time with them before they were 18. So I know you're probably exhausted. And at the same time, you're exhausted. Thank you for the nod. You're at that stage. However, I wish I had that time. I'm going to track them everywhere I go, even though traveling is a hassle when they were young. And spend as much time as you can with them. And I know we want to give them something. So this resonates with me. We want to make sure they have the know-how. And you start from yourself. You know how first. Then you pass it down to your kids. Perhaps not even your kids, the next generation, whoever that may be, whoever that might benefit from what we know. Okay, so that's time. And get to the know-how. Distressed properties sometimes don't necessarily mean the property I just showed you earlier. The owners could be distressed owners, personal issues, sickness, divorce, etc. And I know that some people think it is an opportunity to take advantage of other people. And you with the know-how, it's a win-win. You're helping people getting out of that situation. You're helping people getting out of that situation. And I have some lawyers that reach out saying, Brooke, I have clients that are getting through a divorce. Can you help them with the finances of this property? I might not be able to help them directly. And with the network, I refer them to a mortgage broker or I refer them to people who are familiar with the area, etc. So that is your know-how. Your know-how actually doesn't have to start that complicated. I do want to show you this picture and ask you, is it hard to spot the worst house on the street? If you have an issue spotting the worst house on the street, raise your hand. We can go back and review a few things. Can we spot the house you want to purchase, the worst house on the best street? Yes. So, by the way, that's the house we purchased, just so you know. It's still on Google Map. So it is really not hard to spot the worst house, even though it could be stressful when you look at properties that I showed you earlier. So some of the questions you might want to ask when you approach the seller. So I'm just giving you some examples. Anything we do, everything we ask, there's a purpose behind it. And this resonates with when you talk to your power team members, when you talk to a lawyer, when you want to find a property manager on your power team. Every question you ask, there's a reason why you ask that question. For example, how long have you owned the property? How long have you owned the property? So the property I showed you earlier, the owner owned it since the 40s, late 40s, 50s. They're the original owner. So there's a lot of equity in the deal. Okay, so you know that, hey, there's equity. Perhaps there's some flexibility as to the price, or there's possibility of a vendor take back. It's a more advanced strategy. We do cover it in the advanced training. So what do you like most about the property? Some of the questions we ask is to get them into the emotional side of things. And that's when you connect with people, like raising funds, when you take the class. And when you take personality tests, you know how to communicate with people. What's important to them? Sometimes they just want to look for somebody who will take care of the property. For example, if you're going to be in the neighborhood, are you going to grow your family in the neighborhood? Or if you're going to keep the piano I have in the house. It's funny sometimes, but it's true. And they will ask, could you keep a few things in the house, or can I keep a few things? They might be emotionally attached. They like to know that people are going to take care of the property or grow roots in the property. And amenities, are there schools? Are there schools in the neighborhood? I can tell you, when I look at the Fraser Institute school ranking, basically the property price goes along with the school ranking. Funny enough, that's just the way it is, even though it's public school. I'm not even talking about private. So what repairs do you require? That's a starting point to negotiate. Is there room for a forced appreciation? Can you improve the property, for example? And ask them, what's their motivation to sell? Why do they want to sell? Why do they want to sell? And I mentioned perhaps health issue, distress situation. If they want to get out of it sooner, if you're the type of investor or buyer who is able to close quickly, motivated sellers will most likely to go with you, especially if wholesale perhaps is your strategy. You got to be ready to buy. They might not want to clean up the house. They want to get out quickly. Something happens, or they might relocate due to work. And I mentioned earlier, one of my lease options, they need to relocate due to health reasons. So every question you ask yourself what kind of information you want to get out of it, and how can you help them with the situation. Make sure it's a win-win situation. I'm sure once you have different tools, you'll be able to structure it and be a problem solver. Okay? Sometimes, even if you don't buy the property, if you don't end up getting into the deal, if you're helping them, likely you're going to get referrals as well. So multiple exit strategy. Number three, I like things in three to keep it simple. You can sell for profit, quick flip. You can wholesale it, meaning that it's like a paper flip. You found a property. You might not have to take it to close, and somebody else want it. You're the one who found it. You can pass it down to somebody else. Get a referral fee, assignment fee, wholesale fee, whatever you call it. Have the opportunity for somebody to take profit. Remember, you always leave money on the table for the next person. Number three, or you can hold it for cash flow. Make it an income property and hold it long term. So multiple exit strategy. Few things you can do to increase your cash flow or improve the performance. And short-term rental, doesn't have to be just Airbnb. Short-term rentals, student rentals, and potentially lease options. We always focus on tenant first lease option. And perhaps there's opportunity. I never done it myself. I always do strategy first, tenant buyer first, and it's not impossible. Or property first, you can turn it into a lease option deal. Or BRRRR, meaning that you can force appreciate. By the way, can somebody tell me what BRRRR stands for? Or if you don't understand what it is, no worries. What does BRRRR stand for? Kevin, what is BRRRR?
BRRRR, that would be buy, renovate, rent, refinance, and then repeat the process.
Perfect. Thank you for sharing. So there's opportunity where you buy rent first. If one of the unit is still livable, sometimes you have to buy, renovate first, and rent. I've done both. It depends. However, the R stands for buy, renovate, rent, like Kevin said. Or you can rinse and repeat and refinance and add more R's to it. So just to give you an example of flip that I did and close to what the real numbers are, the mortgage, it's a single family home converted to a 2-unit. So the first mortgage, 80% loan to value. And I'm going through the example with you. Feel free to pull out your calculator and run the numbers. I'm going to make it simple for you. Whatever I highlighted in green is the money you're going to come up with, okay? I'm not saying out of your pocket. Perhaps you have other vehicles, or perhaps you have investors coming in the deal with you. 80% loan to value, meaning 80% is from the bank. Let's assume you have the funds to fund the deal yourself. The total cost, purchase price, plus closing cost, plus renovating is $550. Everything I highlighted in green is money you have to invest. So money in the deal. Funds in $197. The property was sold for $750. So this is the total profit. This is the total profit. Basically, just all the money in. So including the banks, you have to pay back the banks by the time you sell. You're getting $750 when you sell, and then $550 is the total cost. You're making a profit of $200,000. So you just doubled your money. You just doubled your money. More than doubled your money. Okay? Everybody follow? Simple number, quick example. If you just flip it. So that's one of the exit strategy. Exit strategy 1. What if you BRRRR? I already asked Kevin to give us the answer. Make sure you buy under fair market value. So there's different ways of doing it. Like I said, ask the right questions. You will find the opportunity. Find money in the buy. Number 2, force appreciate. You renovate to add value. Number 3, find an exit strategy. Find an exit strategy that fits your financial goal. Things in 3, if you haven't written this down when I asked you earlier, number 1, money in the buy, force appreciation. Number 3, multiple exit strategy, or know what your exit strategies are. These are the 3 steps. So even though people use the term BRRRR, the process, buy, rehab, basically renovate, rent, refinance, repeat, that is your exit strategy. You refinance to get your money out. Okay? You refinance to take your equity out. So same example. I simplify the numbers. Again, fund in 197. What if you're not selling the property? What if you're not selling the property? You went back to the bank and you refinanced it at $750. We refinanced it at $750. So you were able to get $200,000 out of the property. In that case, if you can still qualify for a mortgage, go ahead and use that $200,000 and buy your next property. And that's how you scale. That's how you scale. After refinancing, you have no money left in this particular deal. Okay? So asset for free, income for life. That's what it means. No money left in the deal. When we talk about no money left in the deal, it's usually what we call a perfect BRRRR. a perfect BRRRR. In some cases, you might take some money out, not all of it. You're still able to take out some equity and get to your next deal. So money in, money out, asset for free, income for life. If you can constantly take money out, how quickly can you scale? Or how far can you go? Sometimes refinancing takes some time. Regardless, you can still take money out of the deal and continue to scale if you know how money works. So these are 2 examples. If you're at the stage where you're accumulating capital, so you can buy and sell to create capital, so you can buy and hold to create wealth. In the first example, you buy and sell. Second example, you can hold the property, hold asset for free, and then you have cash flow for life. Okay. And side note, depending on the interest rate, if you take a lot of equity out, your mortgage payment might be a lot higher. Your cash flow will be reduced. So your cash flow might be reduced, not to 0, as long as you still have cash flow, then you have income for life. If it's not clear to you, this is the path that I followed throughout the process. 3 stages. We start talking about your goals, your S&P. If your strategy happened to be distressed property, goal, again, it starts from you. Your why, your goal, your S&P, your strategy. And that's what we followed. I hope you're educated today. I know number 1 is to get over fear. If you have the knowledge, you're going to get over fear. And I hope you're inspired today to take the next step. Or even if you already have a portfolio, take it to the next step. Improve it. Improve the portfolio. I want you to be inspired and have a lot of fun today. No stress. I didn't give you a lot of homework. I didn't pick on you a lot. The point is you're having fun. Just listen to my stories and look at the clips. Follow the 3 steps. Everything in 3. Number 1, money in the buy. And I highlighted the M. I talked about the market. How do you find the market? How do you find the market and find money in the buy? Number 2, multiple exit strategies. Multiple exit strategies. With the example I showed you 2 exit strategies. You can hold it, you can refinance it, and sometimes you don't even refinance it. You continue to enjoy the cash flow. You can sell it and create capital in a short period of time. Number 3, forced appreciation. You renovate it or rehab it, force appreciate the property. So that is number 3. That is the GPS, the roadmap we follow today. Did all of you see the GPS and the map as we go along? Just imagine if you go through the mentorship with your mentor, or even if you're working with a strategy coach at this moment, if somebody can show you the map, somebody can show you the way. It's not that complicated. Wouldn't it make things a lot easier and simpler for you as you follow along? So I showed a picture of a funky house on top. This might be the distressed property you're looking at. Regardless, this is the path you're following. And behind it is a return on investment mindset. Return on investment mindset. It's not how much it costs you, it's how much it makes you. Action takers, if you need some clarity, talk to your strategy coach. If you don't have one yet, take a picture of the QR code when you're watching the video or when you're here with me. So I do recognize Ida is here too. And if you're new in the community and you want to speak to a strategy coach, if you don't have one yet, book the time. Book the time. Next step, after the webinar, join the workshop. If you take a screenshot or take a picture of the QR code that gives you the discount code to join the workshop, you can bring somebody along with you, your spouse, your partner, your business partner, your brother, your friend who want to show the path with. And I know some of us in the community are bringing your friends along to the workshop. So make sure you take advantage of the discount and see us after the workshop at TYT Connect. And if you haven't been to a live workshop, This is how much fun we have and what it is like. All right, I think you see some of you guys on the screen there. Remember how much fun we had during that time. So that's where it's gonna lead you. From the webinar, you're gonna see us live at the workshop. This year, the workshops are live in person. Throughout Canada, whether you're in Toronto, Edmonton, Calgary, Vancouver. So if you're in Alberta, Wendy will be there. If you're in Ontario, I'll be there. And Kevin will be in BC as well. And I'm here to support you. If you have questions, all of our emails, just our first name, brooke@trustyourtalent.ca, if you have questions. So that concludes the webinar today. Like I mentioned, I'll be here as long as you have questions, comments, input, concerns. And I'll start from the chat box. Do I see this, guys? Yes, 90% of the speculators loses money. Thank you for the input and thank you for your support, guys. Any questions, input, comments, concerns, or how you would like me to improve the webinar, or how you want to see us giving you more support or answering your questions? Donnie, by the way, my son's name is Donnie, so it's kind of weird, keep calling Donnie.
Actually, I did notice that. I have you on Facebook, so I seen a couple of your posts, and I kind of find that odd too. But yeah, it's just a connection. It's a nice way to kind of make a connection, I guess. Yeah, exactly. Exactly. Yeah. At the same time, it feels like it's very familiar. So when I use the example or, pick on you during the webinar, it's fun. It's all fun. You'll remember this too, right? Remember how people make you feel. And mute yourself. You're talking about the camera. Sorry, the mic is not on. I said, yeah, you can pick on me all you want. That's fine by me. I think we'll do more of that when you're in the workshop. So no worries. So thank you everybody for being here. And I want to thank Kevin and Weddy for supporting me today. So they made the poll really smooth and letting people in, start the webinar with me. Really appreciate that. And most importantly, thank you for investing the time with me. So I have the opportunity to give back. Take care. I'll see you guys.